Ethereum is quietly disappearing from exchanges. Supply is drying up while demand slowly builds. That is the setup many analysts call a classic recipe for a supply crunch. New on-chain data shows that only a tiny slice of all Ether now sits on centralized trading platforms. That means most coins are now in long-term storage, staking contracts, or complex DeFi positions far away from instant sell buttons. According to CryptoQuant, exchange balances now represent roughly 8.7% of total Ether supply. That is about 16.6 million coins. The share has dropped by around 20% since mid-2025. At the same time, specialized digital asset firms and exchange-traded products have been quietly accumulating. Combined, these structured products now hold almost 12.8 million Ether, or around 11.6% of supply. Much of that capital follows mandates measured in years, not days. When those entities buy, they usually do not flip quickly on short-term news. They allocate, rebalance, and then wait. Bitcoin shows a similar pattern. Only about 13.1% of all Bitcoin sits on centralized venues, also near record lows. Together, these trends suggest that both major assets are moving into the hands of patient holders and institutional vehicles. Liquid coins become scarcer, even as interest in crypto remains elevated. Analyst Milk Road argues that Ethereum is slipping into the tightest float in its history. Ether keeps flowing into staking and restaking, into Layer 2 activity, into data availability layers, into collateral loops, and into deep cold storage. In all of those places, coins rarely hit the open market. The visible supply on exchanges shrinks while the network continues to grow. If fresh demand returns with force, buyers will be competing for a much smaller pool of readily available Ether. In past cycles, similar structural squeezes have fueled powerful rallies once sentiment flipped. There is no guarantee that history repeats, and timing is always uncertain. But a thin float can make every incremental bid matter more. Right now, price hovers near $3,000, barely moved on the day. Markets may look calm on the surface, yet the foundation underneath is changing. More coins are getting locked away, and fewer sit on order books. For long-term investors, understanding these slow on-chain shifts can be as important as watching any chart. This has been BlockBrief. Stay informed, stay ahead. Supply trends matter.